This is a company that has flown under the radar since its IPO. In fact, it actually fell nearly 90% from all-time highs. And despite having more than doubled recently, the stock still finds itself down over 70%. We are in fact talking about Grab Holdings. Now, I've seen questions about this company come up in the comments time and time again. And so living in Singapore, I think it's only right that we start to talk about this Southeast Asian unicorn company. And hopefully you will have a better idea about the context surrounding the company and get to understand a little bit more about the environment in which it is operating in and whether or not it has the potential to continue growing. But as always, potential is a dangerous word, so let's dive in. Now, Grab was launched all the way back in 2012. I've read a lot of articles and posts on X actually calling it a Singapore company, and I think that is only partially true because the truth is Grab did not actually start in Singapore. Now, Anthony Tan, the CEO, basically started Grab under this brand called My Taxi in Malaysia, and they were looking to solve the issues of unlicensed taxi drivers in Malaysia, and the whole hope of it was to actually provide safer, more reliable taxi rides in Malaysia. Now, they expanded this business into different parts of Southeast Asia in 2013, and I believe that was when they came into Singapore. Now, at that point in time, they were known as Grab Taxi, and they were primarily a ride-hailing app. And I believe it was due to some regulatory issues that they eventually moved their headquarters over to Singapore. Now, for me, that was a game changer. I mean, not the moving of the HQ, Grab Taxi actually coming over, because I really dislike waiting for a taxi. Now, I don't know how it works where you live. When I look at the YouTube analytics, it tells me that the majority of you are either from Singapore, the US, or the UK. And I do remember that when I was younger, depending on where I was staying, I had to walk a distance to the main road in order to flag a cab. And so apart from the inconvenience of having to walk a distance to the main road to flag a cab, what I didn't really like about it was the uncertain wait times, because on days that you're lucky, you can get a cab between 10 to 15 minutes. On days perhaps when you're not so lucky, you can end up waiting 30 minutes to even 45 minutes up to an hour for a cab. So depending which part of Singapore you're at and the frequency of taxis that go past that area. Now, for me, apart from the fact that I had to walk out to a major road or major intersection to wait for the cab, I think one of the other things that I didn't really like was the uncertain wait times, because on certain days, if you're lucky, you can get a cab within 10, 15 minutes, or other days you end up waiting more than 30, 45 minutes for a cab. And so another additional layer of uncertainty is, I don't know how it works overseas, but in Singapore, two drivers can actually share the cost of one taxi, and so because of that, they end up working on shift. And sometimes if you flag a taxi down in the middle of a shift change, or if the uncle is actually going home and the direction that they are going is opposite from where you actually want to go, they are actually, at liberty to decline your ride, and you're back to having to flag down another taxi. And so ultimately, that is what Grab solved. They not only cut out the uncertain waiting times, they also help to match the appropriate drivers with the customers. Now, in March of 2018, Grab actually acquired Uber's Southeast Asian business, and it was around the same time that they started to expand their business into different verticals. Now, in May of 2018, they actually launched Grab Food, which is their food delivery service, and in November of 2019, they started to pilot the concept of Grab Mart, which is their delivery service, and now, you can deliver things from groceries to other necessities as well. So I'll show you how the app looks later on, but this, was really just in time for the pandemic. Now, Grab was listed on Nasdaq in 2021, and they launched a digital bank, GXS, in partnership with a local telco, Singtel, which I don't really like because I often associate, Singtel with poor customer service, inefficiency, and hidden fees. So I honestly never even bothered with the product until now because I wanted to make this video. So I have to say, first impression is that the app looks great. They give, I think, around a 2 to 3% kind of interest credited daily. It's 2 to 3% per annum, but the interest is credited daily. Now, on top of all of this, they actually also offer a subscription where it actually saves you, some sort of delivery fee. So their subscription plan is actually called Grab Unlimited. It costs around $5.99 Sing dollars a month, and it saves you a bunch. Now, basically, you see over here, this is actually a real screenshot from inside the app. You can get a $3 off delivery fee, and depending on where you're ordering during peak hours and things like that, this delivery fee can be anywhere between $3 to even $6 or $7. So as long as you're using this subscription at least twice a month, it actually makes sense to get the subscription. Now, on top of that, you can actually see that there are other deals over here, but of course, there are certain conditions like minimum spend and things like that. And more importantly, right, you can actually see in the app, they actually tell you how much you save since you have started using Grab Unlimited. So over here, you can see I have saved around $428.30 since September of 2023 all the way until today, which is why this is attractive to people who use the app very often. Now, if you listen to their most recent earnings call, you'll realize this whole subscription business forms quite a large component of their current current business, they actually tell us that around 1/3 of their delivery business actually comes from subscribers. And when you look at how subscribers interact with the app, you can actually see why they really want to drive more people into their subscription business. Because subscribers tend to spend 4 times more than a normal user despite all the savings that they have, and the frequency of use is actually 3 times higher. On top of this, the different product offerings that they have on their app make it very easy for them to cross-sell customers even if they are not a subscriber to their service. So what they are trying to target right now, or basically their aim, is to actually cross-sell a GrabFood user to GrabMart and vice versa, because they actually found that users of both of these products tend to actually transact 5 times more on the app than compared to a user who only uses either one of these products independently. And so whether or not we are talking about a subscriber or whether or not we are talking about someone that actually uses 2 products on their ecosystem, what they have actually found is that they actually see more or less the same kind of user retention, which is basically 2 times higher than if a user just uses one product from their ecosystem. Now, when it comes to total addressable market, I believe Grab is doing this slightly differently from other companies. There are companies out there like Google and Microsoft who have a more global TAM, whereas in terms of Grab, how they actually run their business is they actually take a more hyper-local approach. So a hyper-local approach means that they actually adapt their business to suit the government policies and regulations of the country that they are in. And so basically their focus is on serving the people within Southeast Asia. And I think it's this hyper-local approach that they actually take on that is one of the reasons why they managed to fend off competitions from companies like Uber who are actually bigger than them. Now, if you take a look at the latest data, it actually tells us that there are around 697 million people in Southeast Asia, but that is not exactly the entire market. Now, but I'll talk about this later on, but I just want us to keep this number in mind, 697 million. So when it comes to, the food delivery business, that has become a norm in most countries, not just Southeast Asia. And it's not just for the locals, but tourists who are traveling to the country. And this sector is expected to show a 14% CAGR through all the way to 2028. Now, if you take a look at this infographic over here, you can see that in most locations around Southeast Asia, Grab has taken a significant market share. I think only in Vietnam, the competition here is slightly closer, with Shopee Food that is in second place. However, this Shopee Food actually belongs to Sea Limited. And if you know Sea Limited right now, they're basically more focused on their e-commerce side of the business. Their food delivery business is not something that is a big focus for them right now. And so because of that, I still think Grab has the edge over here. Now, apart from Sea Limited, another big competitor is Gojek. Gojek is, I think, an Indonesian company, if I'm not mistaken. They actually compete in both the ride-hailing space as well as the delivery business space. And while he has tried to branch out into different areas of Southeast Asia, I think at the moment, it's still predominantly based in Indonesia. So apart from the food delivery business, we have to talk about the ride-hailing business. Now, in Southeast Asia, this is poised to grow at a 5% CAGR. This should be a $12 billion market by 2029. And because Grab has had a head start on some of its competitors, it does have a dominant market share in this area. Now, based on this report in the Business Times, as of April of 2024, they have about a 70% market share. Right? And then finally, we come to their financial services sector. They do have things like GrabPay, which is a point of sale system. And I do know, at least not in Singapore. And in Singapore, it's not that common. But if you go outside of Singapore into some of the other Southeast Asian countries, it's actually not uncommon to see merchants not accepting cards like Visa and Masters, and they actually transact through GrabPay, which is a point of sale system. They do have Grab Insure, Grab Finance, but those are very specific products aimed at basically, serving their partners and merchants and things like that, and some of their passengers. So I believe they actually partner with Chubb to provide basic insurance for their drivers, for their merchants, for their passengers. And when it comes to Grab Finance, basically they provide loans to merchants and small businesses when these people find it hard to get loans from a traditional bank. Now, and because these merchants and small businesses are actually running on Grab's platform, during the latest earning call, they actually tell us that the way that they assess how to disperse these loans is actually not using the traditional credit method. They actually have around 120 data points based on how these businesses are run to inform their lending decisions. But what has actually excited investors, right, is the launch of their digital bank GXS or GX Bank. This has been launched in both Singapore and Malaysia. Now, looking at it from the perspective of net interest income, not just overall revenue, within Southeast Asia, the net interest incomes generated by digital banks should be around $15 billion in 2024, and that is actually projected to grow at a 5.6% CAGR figure all the way into 2029. Now, I do have my concerns regarding the financial services segment, which I will talk about later on. And because there are some stories here that I believe, might have gone under the radar, especially if you're not in Singapore. Now, before diving into the app itself to show you how it looks like on the inside, I want to talk about some of the context that I have or the way I think about their business segments in detail. Now, the first thing I want to point out is when we are thinking about investing in Grab, we have to understand that their total addressable market at the moment, when we talk about Southeast Asia, yes, we call it one region, but this one region actually have 11 different countries, which means 11 different governments. And right now, Grab is operating within 8 of these countries. So Grab's strategy, like I mentioned earlier, has always been to localize the way they do their business to suit the environment. So they basically adjust and adapt their business to match government policies and regulations and things like that. And so that is how they outcompeted Uber in this region. And so we can see from the way that they run their business, they are a very agile and innovative company. And so on a high level, I do think that apart from the food delivery business, apart from the ride-hailing business, I think people are really excited about the financial services component of this business. Because if you take a look at this report over here, I think generally people feel like there's a large unbanked population or underbanked population that Grab can serve through their financial services. And this is a region that is seen as with high mobile penetrations, which means that people actually have easy access to mobile phones. And I think Grab even confirmed that in their own interview, which they actually posted on their website, where they talked about the ease of people actually getting refurbished mobile phones, right? So even very basic functionality on the phone is enough. And actually it's because of this environment where there's high mobile penetration, but they're not necessarily tech savvy, that people want to have a very clean interface on their phone, and they don't like to be cluttered, which is why the whole super app thesis actually makes sense in this environment over here. And on top of all of this, people actually expect that as the Southeast Asian economy continues to grow, there will be a growing middle class, which means a larger capacity to spend. Now, you also have to remember, like I said earlier, we are really talking about an entire region. There are currently 8 countries that Grab is operating in, and because of that, I do think that the growth that we expect to see in the region might be a little bit more lumpy than exponential. And so that is something that we have to bear in mind as investors. So just a very extreme example, if you take Singapore, for example, if Singapore continues to do well and everyone continues to spend more money on Grab. Now, Singapore currently has a population of only around 6 million, and that is actually less than 1% of the entire Southeast Asian population of 697 million. Now, it's been reported that around 41% of Singaporeans find themselves on Grab, so that is around 2.4 million users. And if you look at Grab's most recent earnings report, you can actually see that the monthly transacting users is around 42 million. And so, 2.4 million Singaporeans basically represent only around 5% of their overall users. And so even if Singapore economy continues to grow, even if they continue to expand, the impact to Grab's revenue might not be significant. Because I know a lot of people, when they think about, the Southeast Asian emerging markets and things like that, they look at the GDP as a whole, but actually we see that the GDP is quite unevenly distributed over here. Because if you look at it from another perspective, if you look at the GDP per capita, Singapore is the highest at $88,000. And the smaller countries that Grab is serving, which is Myanmar and Cambodia, both of them have a GDP per capita of around $1,000 and $3,000 respectively. So even if these countries are growing at a faster clip, right, I'm not too sure how much of that growth will initially be captured by Grab, because like the report earlier mentioned, actually Grab's target audience, right, it's not even the low income people, because the low income folks might not have that luxury to spend, to pay delivery fees and all that, because they have to take this money to spend on their daily necessities. It's actually the more middle and higher income folks that have this excess cash that they can spend on certain luxuries to pay for the delivery fee and to pay for the expensive Grab rides and things like that. So how long will it take the population in all these various countries to achieve middle class status? Really is up to anyone's guess, because I can't say that my understanding of the Southeast Asian economy is comprehensive. I'm just someone that lives in Singapore, which is just one part of Southeast Asia, so I can't say for certain how things will play out in other countries. Because one of the things I also presume is that yes, while some of these countries might have a lower GDP per capita, but because of their lower cost of living, in order to achieve a middle income lifestyle over there might not be as tough as it is in Singapore. So I believe for the middle income to grow, we need to increase the standard of education in the region. That definitely needs to improve. There needs to be sound policy making and basically sound regulation as well. So this is definitely, for me, a longer term investment because I am quite optimistic about the region in the long term. Currently, only 50% of the population in Southeast Asia stays in urban regions. So which is why earlier I said, when we look at this number, 697 million, we have to realize this is not the entire market that they are going after at the moment. We can actually say that Grab's market is probably around half of that at the moment, and it will take time for the whole urbanization process to take place. And I don't think this is something that is going to happen easily in the next 2 to 3 years. And as I'm filming this, I actually just thought of, one other thing that could perhaps speed up this transition into a more middle class kind of population in this region, which is basically the digital economy that we find ourselves in. Because of apps like TikTok Shop and things like that, it allows people greater opportunities to basically go after the economic growth and to share in the economic growth of the region. And so there are really a bunch of factors that dictate how this will play out, and there's a lot of push and pull and things like that, and it's just something to be aware of, right? Beyond just thinking that, this is an emerging market, so it will definitely grow. And I believe understanding some of the nuances in the regions and how things will play out will help better inform your investment thesis and your own investment expectations from here. And so if you take a look at their most recent quarter, actually it was pretty decent. Revenue growth came in at 17%, while gross merchandise value was up 15% year over year. So I think moving forward, if we are going to talk about valuation, this is actually an interesting metric for us to look at and to keep track of, because I think we want to see the correlation between gross merchandise value as well as revenue. And I think what we want to see is that they are able to grow revenue at a faster pace than gross merchandise value, because to me that actually demonstrates the ability of the company to monetize its user base. Now, from what I see in their earnings presentation, I don't actually see a number that details the total number of subscribers over here. So I'll have to do a little bit of digging when it comes to the subscriber number, and because that to me is quite important in terms of their overall business. Now, in terms of their financial services sector, you can see over here that they have over $1 billion of deposits, and their loan book currently stands at around $567 million. And of course, they do have a healthy balance sheet. I think cash and other cash investments, time deposits and things like that make up around $6 billion, and they only have over $320 million in debt. Right, so they have a very healthy balance sheet. So I think personally, for me, I have to say that while doing this research on this company, the market opportunity that is in front of it is actually quite exciting. It does seem like it might really make a good investment from here. Now, I currently don't own any shares of the company, although I do use their products and services. I wouldn't consider myself an active user, so I guess it's a case of out of sight, out of mind. And so for the reason why I don't actually use their products and services as much, I talk more about it in this video over here, and I'll see you in the next one.